Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Tuesday, April 19th, 2016, and we're looking at the Dow Jones Industrial Average, which for the second day in a row has closed above 18,000, trading at 18,053. So we didn't have a tremendous range or a tremendous move up today, but it was a solid move above 18,000. Low on the day, 17,984, so it did dip below there, and the high on the day has been 18,103. Now, Standard & Poor's 500 definitely on the move. We're looking at the E-mini, and the E-mini has not moved past 2,100 yet, although the standard S&P has. We're looking at the E-mini at 2093.75, up 7 points. Low has been 2084, and the high 2098 on the day. So traders, we are over 18,000. We're looking at the Dow Jones Industrial Average. This is a daily chart. As you know, I have been on record under the belief and the assumption that the U.S. equities markets would take a stab at these historical and record highs, and traders, we are closer than ever to actually seeing U.S. equities achieve that goal. Daily chart, all I'm looking at on this chart is three particular highs that are historical highs. This high that came in back in November of 2016. We've got another high right here, or top, actually a series of tops, and they come in just prior to the August meltdown, and then the historical or record top that comes into the market, and that comes in just below 18,300. Now, we are certainly above this former top right in here and this top here. And so our next real level in terms of historical data is to take a look at this series of tops that we had here, here, and here, as the market was trading sideways up near these tops. So you definitely see strong resistance here. Here we actually break through the record top, then we break below it, we oscillate, and then of course we break lower, but we can see that top throughout here, as well as these two particular price points that we talked about. Now, that being said, this is our current level on the Dow Jones Industrial Average on a technical basis of where the market could in fact go, and that obviously is 18,100 and change in that area. So we'll look to see how the market trades. An effective break above this would signal, as far as I'm concerned, a move to these record tops. So as we look at the Standard & Poor's E-mini today, we are looking at a daily chart, standard candlestick format. My sense with this market currently is that we are right now at a pretty critical level. You've got a series of tops that came in right in the particular price point that we're at now. If I carry this line over, what you will see is that that matches precisely with where our top came in today and our highs came in today. And I'll be very curious to see if over the next couple of days, because it's only Tuesday, of course, but if over the next couple of days we actually go and breach this particular price point, because if we do, then we've got this number up here, which is 2122, and that references the tops in the market that came in prior to this year, quite obviously. And so under the assumption that we do break above these tops, and I've gone ahead and compressed the chart so you get a better indication of really what we're looking at. This is one area here that we just talked about, but then you get these tops, which is, this is that record high at 2122 that represents this dotted line here. Now, if in fact we get a continuation of this rally and we go to new highs, the attempt to forecast where those new highs might be, I'm simply pulling out an old Elliott wave modeling trick in which we look for wave 1 and waves 5 to be about equal. If that's the case, I've simply put a scalable line, and that would take us to about 2175. So if in fact we see this market unfold with a solid Elliott wave model giving us good predictability, we could see this market, as I say, go and trade above these historical highs, and that's something we certainly want to take a look at. So traders, really to slow it down and to put the last move that we've been watching in perspective, I brought out a very, very long-term weekly chart, and this weekly chart really shows you the move from 2011 when the market was trading at around 1,000, half the value that we're seeing on the S&Ps, and tracks up through a multi-year period to hit these highs up above 2100. From there, we've had two really sizable corrections here, and then of course here, and then this last rally kind of completes this W that we talked about, this W pattern. And obviously, if we breach this particular price point, we are headed to new highs, and that to me could be very exciting. Now, when we look at this marketplace based upon that, and then we go and uncompress this chart, and let's go ahead and do that right now, you can see that we're absolutely at this point. Let me go ahead and move this over, but we are flirting with these record tops, and we should have an answer to that, whether or not the market can sustain and move above this particular price point, or if it's going to once again find some headwinds as it had back in November and December of last year. And that's been my reluctance over the last couple of days of entering this market, because I could conceive of a model that would take us up to these record highs, kind of correct a little bit, and then move above them. So just like gold, the one thing that we're looking to see is whether or not it breaks above major resistance, and within the S&P, major resistance sits at about 2100. If it can actually break above, that signals a buy. And of course, if it comes into the market, trades to this area, finds resistance, well, that's going to tell us that we could get a correction in the market, and we either want to sit on the sidelines or be sellers. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.